Good morning, it's Tuesday the 30th of August. We hope you had an enjoyable bank holiday, and yes, we're back with our weekly look ahead at this short week's key economic highlights brought to you by Atlantic Capital Markets. As always, we'll start with a quick rundown of the key economic numbers being issued this week, and we'll then dive into some of the more important stories afterwards with our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today with an update on the inflation situation in Germany and how consumer confidence is faring in the US. And both of those stories we'll discuss straight after this. Also today we'll hear consumer confidence in the Eurozone and the JOLTS job openings in the US. On Wednesday we'll get the latest manufacturing and services PMIs from China, as well as the inflation update in the Eurozone, and again two stories which we'll cover in more detail shortly. Wednesday also brings an update on GDP in Canada and the EIA all inventories. On Thursday, we'll get an update on retail sales in Germany, the global manufacturing PMIs, jobless claims and US ISM manufacturing PMIs. And finally, Friday is US non-farm payroll day, which we'll give our thoughts and analysis on towards the end of today's video. Also on Friday, an update on PPI in the Eurozone. And the companies that we'll get trading updates from this week start today with Bunzl, Baidu and HP, three companies which we'll discuss in more detail shortly, and also today CrowdStrike. On Wednesday it's the turn of PVH and Okta, and on Thursday we'll hear from Broadcom, Lululemon and Campbell's Soup. And finally on Friday it's the turn of Ashmore. Well, all eyes were on Federal Reserve Chair Jerome Powell's hawkish stance on Friday, and investors are expected to continue mulling over his comments at the start of this new week. Attention then is likely to switch towards economic data with the release of the Eurozone inflation and the US jobs report. Earnings are slow as well this week in what could be a relatively quiet week as the summer winds up. So let's take a look at this week's key stories in more detail. Today we get an update on inflation in Germany. Well, German inflation hit 8.5% year-on-year in July and is expected to keep rising. As the energy crisis deepens in the Eurozone's largest economy, food and household bills are expected to keep rising. Furthermore, PPI inflation jumped by the most on record in July, so any hopes that inflation is peaking in Germany are most likely misplaced. The Bundesbank warned that inflation could hit double digits in the coming months, marking the highest rate in 70 years. The DAX lost over 4.5% across last week and traded lower at the start of the new week. Tuesday also sees the latest consumer confidence figures in the US. Well, the Conference Board's Consumer Confidence Index fell to 95.7 in July, an almost 18-month low on fears over higher inflation and rising interest rates. Weak consumer morale can result in shoppers reining in spending, which leads to slower economic growth. This month, consumer confidence is expected to tick higher to 98.2 despite inflation remaining elevated. Confidence could improve slightly given the strength of the labour market. And Chinese search engine Baidu is due to release Q2s on Tuesday. The company is likely to have had a tough few months given the ongoing disruption from COVID, which could see the business move away from its economically sensitive operations, getting revenue from advertising and focusing more on cloud computing and self-drive technology. Expectations are for revenue to fall for the first time in 2 years, down 6.2% to 29.411 billion RMB. Adjusted ADS expected to fall 36% to 9.81 RMB. The outlook will be under the spotlight as the firm looks to launch its driverless platform next year. And also on Tuesday, computer equipment manufacturer HP are due to report Q3s, which come as the share price trades down 20% from its June high. And despite encouraging Q2 numbers of revenues of $16.5 billion, ahead of the $16.2 billion forecast. Earnings came in at $1.08. The mood has more recently turned cautious amid concerns that consumers are reining in spending and businesses are more cautious. The slowdown in demand for PCs will be the biggest worry. However, there is hope that PC sales to companies could help counter softness in consumer side sales. Wall Street expects a 2.1% rise in revenue to $15.6 billion in the third quarter and expects EPS to rise to $1.05, a 4.6% increase. And finally, on Tuesday, British multinational distribution and outsourcing company Bunzl due to release half-year results. The company is seeing the COVID-related boost from gloves and masks starting to normalise, but the business still appears to be holding up well. Bunzl has already revealed that revenues rose 16% in H1 to £5.67 billion as prices of products and services raised and owing to new acquisitions. Adjusted pre-tax profits expected to increase 11.5% to £377.3 million. Bunzl has revised its full-year guidance twice, the most recent in June. With many companies suffering from rising inflation, Bunzl could be a good defensive play that can withstand challenging conditions. We get an update on Eurozone inflation on Wednesday. Well, this rose to a new record high of 8.9% year-on-year in July, as food and energy prices soar. Core inflation also rose to 4%, up from 3.7% in June. In August, inflation is expected to rise to 9%, another record high, and well over 4 times the ECB's inflation target of 2%. Fears are growing that inflation could hit double digits sooner rather than later, as energy prices continue to increase and producer prices rise. In Germany, PPI rose to 37.2%, which is expected to lift consumer prices further going forwards. The ECB expected to hike rates by 50 basis points in the September meeting, of course. Policymakers over the weekend said that they would keep hiking rates even if the region fell into recession. The euro against the US dollar trades below parity. And Wednesday also sees the release of the latest manufacturing PMIs over in China. Concerns over the health of the Chinese economy have been growing in recent months. So much so that Beijing announced a massive stimulus program, and the People's Bank of China has cut interest rates by more than initially expected. Last month, Chinese factory activity unexpectedly fell below 50, i.e. contracting, amidst COVID flare-ups. Weak demand, heat waves and high energy prices have also contained China's recovery. In August, manufacturing is expected to expand at a slow pace. The Australian dollar, also considered a proxy for China, trades around a monthly low. And finally, on Friday, we get an update on US non-farm payroll figures. Now, while the US economy has fallen into a technical recession, the labour market is telling a different story. Hiring has remained unexpectedly strong, with 528,000 jobs created in July, well above the 250,000 forecast. The upbeat report defied fears that soaring price inflation and rising interest rates are hitting the labour market. Annual wage growth also remained strong in July at 5.2%, and unemployment fell to 3.5%. In August, hiring is expected to slow to a still solid 290,000, and given the better-than-forecast jobless claims data in recent weeks, we could see another beat. With inflation at 8.5%, another strong non-farm payroll report could cement expectations for another 75 basis point rate hike in September. At the time of speaking, the market is pricing in a 70% probability of a 75 basis point rate hike. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from NatWest, Glencore, Intercontinental Hotel Group, Admiral, Antofagasta and Endeavour Mining. In the FTSE 250, we'll hear from diversified energy company Red Northgate, Alliance Trust, Rathbones Group, Centamin, Page Group, Clarkson, Quilter, Savills, Genuit, Apax, Global Alpha and finally BlackRock World Mining. So there you have it. Once again, it's all about the stalking leopard of inflation. First it was supposedly transitory, then it had peaked. Yet it's still there defying most of the so-called experts' opinions. And like the leopard, inflation doesn't tend to change its spots, a fact many experts seem to have trouble remembering. But don't worry, we're here as always at Atlantic Capital Markets to guide you through the ups and downs of experts forecasting foibles. So as always, thanks for watching and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you want to keep updated on the latest financial news as well as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.